Got three pre-market trades. Had pretty good run. Had a big long flag pattern from 3 o'clock, which got some good ticks on there. So um, I won't be trading during this 30-minute session. So I will be doing some same instructional training throughout this voice chat for the next 30 minutes. Okay, we got 2 minutes to the bell. Okay, obviously, if you guys got your guys bracket set, um, one or two ticks or one or four ticks, depending on your risk, whichever one you want to trade. Okay, obviously, we're gonna look below the break of the cyans that we have. We are looking at the 512 chart. Okay, so if we break off the cyan, we can do 77 short. Okay, looking for a target down there at around the 76 level. Okay, that's our bottom of support. That's our S3. Okay, if we do go long, we want to take this above the moving average. Okay, the moving average is at 78.5 right now. We can take a long right off the moving average. If you are uncomfortable with placing two orders, one above and one below, then you can go ahead and place the obvious. So let's do the I'm gonna say let's do the let's see what we're gonna at. This thing may break down short because we already tested the short. Okay. We could do this moving average long. Okay, let's do the break above the moving average. It's 79 long. Okay, go ahead and plot your VWAP. Make sure you have your brackets in place with your stops. If you do run both sides, make sure you cancel out the order that runs.
Order
Stop
filled.
filled.
Okay. Huge order at 80, level 2. Still got that break below the cyans, I'll remember. I'm just trying to see if the pass through is there. At 77 it triggered. 77 it triggered short below the breakout. Let's do a 78 long.
Stop filled. Order filled.
78 long head triggered. If you missed that, let's do a 79 long again over the 50.
Stop filled.
79 head
filled.
triggered. We're gonna work our way to the VWAP. We right at R4 level. If you got the R4 plotted, look for the reversal at 79.
Stop filled.
The 79 had triggered. If you had your bracket, you would have won that trade.
Order filled.
78.5 below below the 50, or we can go 80 long above the moving average. $79 short. Two orders on this consolidation: 79 short or 80 long.
Stop filled.
Okay, we're right in a zone right now.
Stop filled. Stop filled. Order filled.
The 79 had triggered. 79 short trigger. You cancel out the 80. 79 had triggered. You would have won that trade. Okay, your road is widening up. We are on the zero line, so it looks like we're gonna go short. Remember now, we're plotting below the zero. We're looking at a short pattern. Bearish runs. Break down below the cyan. You can go to 77 short again. Or let's do the 79 long.
Stop filled. Order filled. Stop filled.
Okay, we need to break down below this S1.
Order filled.
Hey, the 77 short had triggered. You can go ahead and take your profit. The one won that trade. Let's see if we break the 76. So we did. Okay, it's going to continue to fall. Got big level 2 downside, 73. Okay, looks like we're consolidating over to the reversal. Let's do a 76 long. Reverse. 74 short, continue. 75.5 long. Watch your chart. You see how we consolidating now? We just bottom support. Okay, 75 long had triggered.
Stop filled.
Take that 76 if you missed it. If you don't have a runner, you can go ahead and take the 76 long. Okay, 76 had triggered. You would have won that trade. Look at your chart, guys. Everything is going green right now. You got your 4 signals ready to plot. Right back to our 77. Reversal on the moving average. 75 short.
Stop filled. Order filled.
75 triggered. Big level 2 at 74. Big level 2 at 73.5. Looking at a 75.5 short.
Stop filled.
Look for this thing to run up. Let's do a 76 long. Big wicks over here. Big level 2 at 78. 76 long head triggered.
Order filled.
You don't want that trade. Okay, right there we had an inverted head and
Stop
shoulder.
filled.
We break above the 50. You see we break above this magenta at 78 long. Back over the zero line. Looks like we're gonna go long again. May run back to the VWAP. $76 short below the moving average if this thing breaks down below.
Order filled.
There we got a 77.5 resistance, so we need to break above that. Let's go 78 long, right above the magenta. $76.5 short on moving average.
Stop filled.
76.5 triggered.
Order filled.
The short it triggered, you would have won that trade. Let's see if it actually hit form. So you see where we at on the those red candles just now. We forming a support. If you look over to your left, that's your S1. This is your hard support right here. So look for the reversal. 76.5 long. We need to break this S1 to go short, or we can go to 76.5 above the moving average to go long. If we break down below the S1, 77.5, we can do the 75 short. Sorry, not 775. 75.5. That's your S1 level.
Stop field.
We can do the 75 short with the big level 2 down at 74. Descending wedge. You can plot that line across the 75.5 just to see your breakout on the support.
Order filled.
Okay, the candle body didn't
Stop
break it
filled.
now. I'm going to plot the long at the 77 just above the 50. Still got that support at 75.5. Okay, go ahead and draw your zone. You still got that
Stop
75
field.
short. Now it might have triggered with you guys paper trading, but I don't believe it'll trigger if you're on live. That's 75. Okay, that 77 had triggered.
Stop field.
That 77 had triggered to see if we break above the magenta at 78. We're looking kind of messy on the 1 minute. $76.5 short. 78 long. Okay, now if you guys continue to watch your breakouts, you guys should be able to get the trading execution done. Okay. Um Pretty much the same strategy every day, guys. So there's your 77.25 reversal bubble.
Order filled.
If you don't catch the bubble, you can catch the breakout off the 50.
Stop field.
That 76.5 breakout out the 50. Still got that 78 long above the magenta, so we're gonna see if we're gonna play this short. 70, move that
Order
long
filled.
to your moving average, 77.5. Okay, that breakout had triggered. Let's see where we at now. Go 77 long on the moving average.
Stop filled.
It's hard for me to plot the short because we got double wicks here, big wicks. So I'm just gonna play and just see if we can get the long up here. 77 long, right on the moving average. The short gonna have to be below the S1.
Order
Back
filled.
below the zero line. All right, let's do the 75.5 short. Let's chase your drag your long order right above the moving average just in case this thing pops up on a reversal. So let's do the 77 long. And right now we forming a support at
Stop filled.
75.75, so we can go to 75.50 short. That's gonna be a tough one because 75.50 was your strong support over there about 10 minutes ago.
Order filled.
Okay, triggered on the 75.50. 75.50 short had triggered. We blew past this support. We're gonna blow past the S2. We are at strong support at 436 at 74.50. We got big level 2 at 73. Let's do a 74 short. See if it breaks down below this. 75.50 long.
Stop filled.
Now, don't get discouraged if you get filled instantly now, because that's just the way simulated trading is going to go. I think if you're doing a trade of eight, you're going to have to be waiting till the price gets passed through. What we want to do is we want to try and recognize your entries so you can get it down, so you can execute your entries on the pattern. So right now, if we're on a 512, we got big double wicks right there. So technically, we won't be trading right now when you got big stuff like that because it's going to stop you out or to get that
Stop
74
filled.
short, targeting below 73. Okay, that 74 had triggered.
Order filled.
Think you would have got you one tick. We got pretty big lots on time and sales, so yep, there's the moving average. The moving average triggered long. So remember now, if you are going back to the lesson again, okay? If your candles are below the moving average, the red and green line, okay, you know we're going into a short, okay? If your candles end up touching the moving average, okay? The touching of the moving average is either going to reverse or we're going to ride the trend. If the candle breaks out through the moving average and goes the opposite direction, just like what had happened, then we're going to go into a long predicament. Okay. So if you watch that thing closely, okay. So look at your 512 chart. See those red candles on the short? It was below the moving average. So that tells you we're going short. Okay. So you look for short entries. Okay. Short entry increments. Now, as soon as you see the candle body, not the wick, the body touch the moving average, then two things going to happen. Either we're going to run down on a trend or we're going to reverse because it's going to start come through the moving average, right? Then you look at that green candle on the bottom where it says the S1. Okay, that's almost like a doji, a little bit bigger one, but that tells you it's going to reverse. Okay, that's what a doji is. Okay, then that green candle body broke through the moving average, so that automatically tells you we're going to reverse long. Now you see how the candles are above the moving average. That's we put ourselves in a longer situation. So now you look towards finding your long entries on either breakouts or, you know, look previous before your supports. We can do, above that and stuff. Okay, so now if you look at the candle, what happens? The candle is now breaking through the moving average, right? We got the candle body below, so we're gonna go look for a short. Okay, now we look for level twos. We see if we can plot an order now just above where we can hit the level twos. So if you're going to look for a short right now, possible 75, 33.75 short. Okay. You see how it's consolidating now? It's trying to make a support level. Okay. So now we already on the moving average. Okay. So two things can happen. We're either going to ride a trend, right? Remember when it touches, keep touching the moving average, that means it's trending, right? Now, if it breaks below, then we're definitely going to show. If it breaks through it on the opposite direction, then we're going to go long. So that 75, where I just called about a minute ago, just triggered. Okay, and we can still look for this thing to go short a little bit. Okay, until the body of the candle breaks through the moving average. Okay, now you're still going to have to look over to your left. Okay, because we still have support levels that we got to break. Previous support levels. Okay, that's why there's that S2, S3, S4. Okay, those are previous support levels. So right now, if you look where the candle wick is red candle wick, we are at 74.25, right? If you look over 5 minutes ago, we had a triple bottom at 74.25. Okay, that we got to break that support. Now, if you look at this whole thing, it's an inverted cup. Break down below the cyan. Okay, that's an inverted cup pattern. Now we break down below the cyan. See that? Now look at your candles now. It's riding the moving average. So remember now, when it rides the moving average, it's a trend. Okay? We're going to drop below a trend. Okay, now we form a support at 73.25. Okay? When it forms a double support, what happens? Okay? We're either going to bounce, meaning we're going to go in the opposite direction, or we're going to break down below. Okay? Now see how the candles are forming? We got a four bottom support at 73.25. Okay, draw your line, look at the trend. That's a descending triangle. Okay, it's like a descending wedge. Okay, what happens on the descending wedge? There's a breakout. Okay, and then look now, we just had a breakout. Okay, so what are we gonna do now? Well, we're still riding the trend, so we're still gonna go short. Short to where? Look at your big level two. We got a big level two at 72. Okay, we got big level two at 71.5. Okay, so we can continue to go short based on level twos. Okay, if this candle pops above the moving average and goes green, then you immediately look for a reversal. Okay, here it is. Here's your green doji. Okay, your next candle There's your doji. There's your next candle is gonna be green. There, green. Boom. There's your reversal. Okay. So whenever you see that candle go back above the moving average, that's a reversal. That doji popped up and gave you an indicator that we're gonna go the other direction. Okay, so now we're above the moving average. Now you have your dot. That's the reversal pivot. Okay, so now we're gonna go long. Okay, now you gotta look across. Are we gonna press? Are we gonna cross over that S2 level? Are we gonna cross over the 50 EMA? Okay, if it doesn't, we look at a see if we get a chart pattern over here. Okay, you see how this thing go. If this thing comes down, we might have an inverted cup, possible inverted cup entry at 73. We may form, if we form another peak to the moving average at 50, we may possibly have a head and shoulder. Okay. Okay, look, we crossed over the moving average again, so it looks like we're gonna go short. Okay. Okay, possible inverted cup entry at 73. If this 73 inverted cup fails, meaning it won't break down on your inverted
Stop
cup
filled.
pattern entry to sell, right? Then we take the
Order
entry
filled.
right above the moving average. Because what happens? The candle is going to break through the moving average to go in the opposite direction. Okay. So that 73 had triggered, there's your inverted cup entry right there. Hopefully you guys saw that pattern. Okay. 73, you would have won that trade for at least one tick. Okay. Possible falling, possible going to fall down below because we got big level 2 on the bottom. But there's a green doji. We're going to go reverse. Green candle coming up next. There's your green candle. There's your reversal. So you see how you can see that thing almost ahead of time? Okay. So you had that inverted cup entry. You won one or two ticks about that. The candle dojied out and it flipped over into the moving average, and then we had a green candle. Okay. See that? So this is what I mean. If you can recognize these chart patterns, right? Because look, we got several chart pattern entry wins. Okay, breakouts. We got several breakout wins. Okay, now this is a lesson on the moving average that I'm giving you guys. Okay, so look where your candles are in conjunction to the moving average. That's going to give you an indication of where we're going to go. Okay, okay, look at right now. I know we're at the 30-minute level, but I'm just one more time. If this red candle passes below that red and green moving average, we're going to go short. Okay, the body of the candle. Now we're looking at the body of the candle. Needs to pass through and closed. Okay. Here we go. Red. Look for the short. There it is. There's your red candle short. Pass through the moving average. So what is the key? See that you can. What is the key reversal we've seen this past several trades on the moving average? If you said doji, you win. Okay, that thing will give you an indication of the direction that we're headed. Let's see how it breaks through the moving average. Okay, now look, you got a doji. Okay, that body of the candle didn't go back to the moving average. Okay, so we continue short. Okay, now let's see if it's going to ride this thing. Is it going to ride the moving average? Okay, that bubble needs to get out of the way. Okay, look where this candle is going to form. See, it didn't go above or touch touch the moving average, so we're going to continue to go short. So it's really important if you recognize which the position of the candles on the moving average. Okay, because if you can see the where the candles are in conjunction to the moving average, guys, you can predict the movement easily ahead of time. Okay, some of you is like, oh, how do you know you're going to reverse? This is where, dude, you find the way you are on moving average. Okay, um, hopefully that was enough that you guys can practice looking at that as well. There's a lot of things to look at. Okay, remember now, don't try to get ahead of yourself. I know a lot of you guys jumped in, went live, and killed yourself. Well, let me ask you this: before you guys went live, did you guys know about this moving average plotting of candles? I don't think you guys did. See, so there's a lot of things you got to practice on before you go live. So try not to rush it. Okay. I know it's the simplicity of it, just using the breakouts, but you gotta understand where the candles are. Okay, according to the moving average. There's a reason why there's that long green and red line. And if you notice on my chat, I always play the breakouts off that line. Always play the reversals off that line. Always say reversing on the moving average, reversing on the moving average. And that's why. If you can see where the candles are according to that moving average, you can plot your entry ahead of time. Okay? This is where I always do my reversals. And this is where everybody say, how do you know it's going to reverse? Well, now you know. Okay? So keep an eye on that. You can practice looking at that. The candle body needs to break through the moving average, and then we're gonna go in that direction. Okay. So look at it right now. Okay, look at it right now. You got that four bottom support right on the moving average. The candle body did not cross it. Okay. The candle body needs to close below it or above it in order for it to run. Okay. There. See how it closed below it? Okay. It closed below the moving average. So now your candle starts to drop. Okay. Pretty simple, guys. Okay. Just another thing to look for. Alrighty. We are past 30 minutes. Um, today's Friday. Okay. I'll be on chat on Monday. If you guys need anything, let me know. I'll be on chat today. And any questions you guys want to see, let me know. I know some of you guys had some posting some pictures of your charts and plotting up some wedges and some lines and stuff. It's good. No, maybe we can fine tune those. Okay. Other than that, guys, look for the patterns. Okay, we got a triple bottom right here forming. Look for chart pattern. Could possibly be an inverted cup break below the cyan. But again, watch the moving average. Okay. And that, you guys have a great weekend, and I'll see you guys on Monday.